The private equity industry has long claimed it does not pose systemic risk to the U.S. economy, but credit ratings agency Moody's says not so fast. Things could be changing. According to a new report, Moody's now expects a race to the bottom between banks and private credit funds financing what they call risky leverage buyouts. Banks are starting to up their lending appetite for those kinds of deals, while also facing competition from the $1.5 trillion private credit industry. Moody's thinks that kind of makes a perfect storm of events that will cause pricing as well as terms and credit quality to erode and fuel risk. We know what risk did in 2007 and 2008, right? The financial crisis. Well, PE firms using private credit is not new, though. Private equity king Thoma Bravo has overseen more than 450 acquisitions, and earlier this year used private lenders to fund its $8 billion purchase of Coupa software. Thoma Bravo's founder and managing partner Orlando Bravo is here in a Fox Business exclusive. What do you think of this Moody's fear, this warning flag?
Liz, thanks for having me. It's nice to be here in your studio.
Great to have you. Great to have you.
So look, I just want to establish this at the onset. When a deal is financed, it's never over-levered. People are not going to put in all their capital. The owner, the private equity firm, management usually invests greatly in these deals, knowing that they have an over-leveraged situation. The lenders, they're very smart, whether they're private credit or the syndicated market. They're not going to just jump in with all their capital that they're responsible for to over-lever a company. Now, a company can be over-levered when it misses its numbers.
Yes,
now, I could see in the current environment where things have slowed down, the cost of capital is higher, interest rates are higher, the base rate is higher. I could see some situations where companies may have some trouble meeting their payments. Now, the key reason why there is no systemic risk in private equity is very simple. Systemic means a whole system.
Yeah, takes down the whole system because it falls like a domino.
And private equity firms, it's such a big market, and private equity firms are so different from one another.
Didn't I hear this, though, during the housing, right before the housing bubble burst? Everybody said, oh, it can't trigger a terrible recession if the market were to turn because it takes too long to unwind or sell a home. And then sure enough, what did we see? We saw disaster. But you're saying, in essence, that under perfect situation and a perfect atmosphere, things will be fine. And even if there were problematic events, whether they be global, economic, whatever, still these companies should be able to make their payments?
Now, I cannot predict a recession. And nobody can predict a recession. People love to predict it or not. Is it going to be a slow, soft landing or not? What we do as owners of companies, and an example is early 2022, when we saw a booking slowdown across our portfolio. What we do is we assume that there's going to be a deep recession. We're overly conservative rather than overly optimistic. So the way we run our companies is we go back and we take out more cost, so that we ensure our same level of profitability in a lower business environment. That way, if there's a deep recession, you're prepared for it and you're not surprised. And if there isn't, you can invest. What I am saying about the systemic point is systemic means a whole system. And private equity as a whole cannot be put into a whole system because there's some firms that focus on many different industries. Firms use very different ways of creating value. So it's not all the same.
And doing their due diligence, which is what you guys are known for over at Thoma Bravo. Let's talk about where you see opportunity right now. What looks good and what is valued most deliciously at the moment where you are ready to take bites?
It's an incredible opportunity for business owners, and I call private equity business owners. And let me tell you why. As an owner of a business right now, this is an unbelievable time to build a business. The financial markets are in disarray, interest rates are going up, things are slowing down. It's a very difficult macro. But what that means as a business owner is you can really focus on what matters. You can build better processes, better leadership, and you end up, after doing all that detailed work, with a much better business 3 years from now than you inherited. Now, in the market, what's happened in software, and that's what we focus on, software companies, we try to buy the market leader, and what we try to do is buy the best innovator that we can then turn into the best business. And those things are not necessarily the same. What's happened in software over the last 25 years, and will continue to happen, is these great innovators, on average, lose money. They have market leadership. They have revenue growth. They have billions of dollars in revenues, like the deals we've done recently.
But they can't get that profit together.
But they're not profitable. So groups like ours partner with management, and therefore we create a system where you can also provide great profits for the shareholders.
And, you know, you're a private equity guy. You buy businesses outright. Important to note, though, for some of our retail investors, they want to buy a piece of a business in the form of a stock. Our stock screening shows, and we just put up some of them, maybe we can put them up again. And what we did was, working with your model, looked at publicly traded software companies that have a PE of 30 or lower, but that are profitable. So Cognizant, Gartner, Verisign, EPAM, Gen Digital, and we're going to put all of these up on our Facebook page. You don't talk about individual names, but what about the AI picture at the moment?
Oh, well, it's unbelievable for enterprise software. Think about it. AI has just increased, and in many cases potentially increased, the value of enterprise software solutions for their customers. Most enterprise software, you own a system of record for a company. You own data. You own a workflow process that is very important for that enterprise, whether you're serving a huge corporation or a middle market company. Now you can embed generative AI into your systems so that senior executives at your client or at your company can interact with those systems in a more human way.
So embedded. You don't have to have a pure play AI company. You just buy the companies that already have it embedded. Orlando, please come back.